I was just going to say, another index. What are we adding with this index? What will it bring that we already don't have with the various consumer indexes that we have seen coming into the market?
Well, I think there's a few things. I mean, this gives another, quite unique insight into the consumer credit markets. We do get, official data from the Reserve Bank on consumer credit, but this combines public data that's publicly available with proprietary Transunion data. Transunion is a credit bureau, so it collects data on over 18 million credit active individuals. We've incorporated their data on the behavior of consumers, and we've brought that into the index, and we think that adds a powerful, different dynamic to the analysis of consumer markets and credit markets in general.
Yeah. Now, let's talk about the picture that you see coming out of this latest reading of this survey. And you're suggesting that what we are actually seeing is an improvement in the health of the consumer. Now, when we tie that to the economic picture, of course, various numbers have been coming through. And while we saw the GDP numbers improving, we're still hearing from the banks that the consumer is hugely indebted and under pressure.
Well, I think that, you're never going to get one story in an economy. There's lots of different sectors and groups in the economy. Some are doing better than others at different times. And I think, if one looks at the consumer credit index that was released today, I don't think one can say that tells the same story for every South African out there. There are some South Africans that are under significant pressure,
100%.
and maybe some that are not under so much pressure. But yeah, I think overall this does actually corroborate with quite a lot of the official data that we're seeing. So we're seeing pretty good retail sales numbers that have come through from Stats SA. The GDP number was actually more buoyant than expected. And if we talk about some of the intel that we're getting in January and February from some of the consumer markets, fast-moving consumer goods markets on the ground, it certainly suggests a buoyancy in consumer spending. So I don't think we're completely in the clear, and I think one interprets this index cautiously. But there's certainly evidence of an uptick in consumer markets.
Some of the sub-indices do indicate some degree of distress. I mean, you mentioned here in this report credit card utilization, and you're reading in it that that remains a little bit elevated, suggesting that you are seeing the consumer under pressure in segments of the market.
That's right, and I think that's one of the elements of the index that is probably restraining the index from climbing even further. And I think it's suggesting to us that whilst credit card utilization, which we interpret as distressed borrowing or borrowing to finance that extra household expenditure that is that households are struggling to meet, whilst that's remaining fairly high, it's certainly not worsening at this stage. So it's not worsening, but you're right. I think there remains some budgetary pressure. I think if you ask anyone on the street, they'll tell you that certain price increases have really hurt the wallet. And so, we're not interpreting this index as a runaway bullish signal for the South African economy. We're saying that there's some green shoots emerging. We're seeing it corroborated in some of the data, but it's by no means a clear picture. There's certainly some budgetary pressure out there.
Yeah, absolutely. I mean, we see the same. I mean, when you look at the company numbers that we're seeing, everybody's mourning. Well, I shouldn't say mourning, because we're really complaining rightly about the price of energy. I mean, I see it on my house bill. I'm sure you see it on your house bill. But going forward, one of the issues you raise is around the issue of inflation risk going forward. What picture are you getting there?
Yeah, so this is always a risk to any kind of recovery, any kind of green shoots that we might be seeing in household budgets, is this nagging inflation problem, price pressures that eat into people's budgets. We're looking, for example, at a potential crisis between America and Iran that might escalate into war, that certainly could push oil prices skyward, and that would in turn have cost push pressures on consumers. So these are always things that one needs to bear in mind. I think, though, that one needn't get too pessimistic on the inflation outlook, because what we are seeing is a strengthening rand. The rand could certainly, in our view, strengthen even further. We might even see a rand below 7 again to the dollar. If we see that in the months ahead, it's going to have quite a strong dampening effect on inflation at the margin, and that's probably going to, if that does happen, I think it will sustain the ability of this index to continue rising. But inflation's always a threat, and it's something that we continue to monitor very closely.
Yeah, let's try and peek into your future glass, if I may.
Yeah.
I mean, this is what we're all trying to do, isn't it? To try and find out what's happening in the future. When you collect
Correct.
all this data together, when you read it together,
Yes.
analyze it for me and paint a picture for me, for the consumer, in the next quarter.
Yeah, I think it's saying that there's pretty good real income growth going on in South Africa right now. That doesn't necessarily mean that every individual is now earning a whole lot more than they were last year, but I think as an aggregate whole, the consumer sector is seeing this real income growth. And by that, really what we're saying is that there's evidence of employment growth starting to come through, albeit not enough. We've still got a very high unemployment rate, but there are jobs being created. If we look at corporate results that have come out in the last few months, they've actually been very buoyant in South Africa. So there's this general uptick of liquidity in the economy. So household cash flow, real incomes, I think, are looking fairly strong. If we look at what the Transunion data is showing, it's showing that loan repayment behavior is actually improving. People are able to pay off their loans a bit better. And then there's, I think, some lingering concerns like the inflation issue that could prove a bit more troublesome later in the year, and this issue of credit card utilization and so-called distressed borrowing. Those need to be watched very closely. But overall, I think this paints a picture of a more buoyant consumer, and I suspect we're going to see it in slightly more buoyant retail sales and possibly even in areas like vehicle sales.